Hello, friends. Today we're talking about the Coca-Cola Company, ticker symbol KO, which recently hit a 52-week low of 51.55. The analysts are saying that it's a strong buy and there's a 23% upside in the next year. They're going to be announcing earnings this week on October 24th, and they're expecting a 69-cent EPS, but in the last 90 days, there have been 12 analysts that have revised down. So is this a time to buy, or is it a time to hold on for what is about to come? I was looking back at the history of Coca-Cola, and during the 2008, 2007, 2008, the recession, they lost 44% of their value, and in the recent COVID down, they lost $20 on the stock. That's about 33%. So I'm trying to look at this and see, is there a time to get in, so that you guys know I have a half position, which is about 2.5% of our portfolio, and I am wondering whether I should buy more, hold, or wait. For those that don't know about the Coca-Cola Company, yes, they do have the Coca-Cola trademark, but they also have Sprite, Fanta, Fresca, and all of these drinks, Body Armor, Fuse, Fairlife, Minute Maid. So they are, and they're partnering with different companies to, especially in the alcohol part. With Jack Daniels, I was looking at it. They're also partnering and trying to get into that area too of business. So enough talk, let's go and look at numbers. So when it comes to revenue, it looks a little flat for my like. I know I said that I bought this stock a couple of weeks ago, but that's how I kind of make myself dig a little bit more into the company. And in the last 10 years, they're pretty much flat. The 5 years have grown about 5%. When it comes to earnings, they have grown. They're also kind of flat at 2.24. In the 5 years, they have grown at almost 10%. Profit margins, this is the thing that caught my attention, is just the profit margins are pretty high at 23%. I normally look for somewhere around 10 to 15. 23, that's pretty good. Free cash flow, oh my gosh, they also have a 25% margin, but once again, the 10-year has been very flat when it comes to the growth of the free cash flow. In the last 5 years is being about 8.2. Book value, it actually has been going down in the last 10 years. In the last 5 years have grown 4%. But look at this return on equity and return on assets and return on invested capital. It's just great. I look normally for 15, and 10 at 5. So those are great numbers. And that's why I just wanted to dig a little bit more. When it comes to dividends, if you're a dividend investor, I'm more of a value investor, they have been growing a good 5%, although lately they have been slowing down to a 3%. When it comes to debt, I think this is part of the reason why the book value has gone down, is because they in 2020 they started getting a lot of debt. As you can see here, the debt has been growing at about 6.8%, 6.7 in the last 5 years or 10 years. But whenever you look at, I'm looking for this number to be under 5. So the average, which means is that in 5 years, they can, with their free cash flow, they could pay the long-term debt. So that's pretty good. So that's about 4 years they can pay out their long-term debt with their free cash flow. Shares, this is where we have a little bit of an issue with the Coca-Cola Company. They have been issuing, they have been diluting their, us, the shareholders. It has been going down in the long term, 10 years, but the last 5 years it has just been growing at about 0.3% CAGR, which for some people that's not a big deal. I don't think it's a big deal, but I don't like whenever companies are starting to dilute their share outstanding. It's just not cool. Which it's actually partly why it's also affecting the earnings, the book value. Everything gets a little messed up there. So whenever we're looking at a 5-year growth rate, that's an average. I only say that it in the next 5 years, and this comes from Yahoo Finance, they're going to be growing about 6%. But looking back, the revenue, they grew about 5%, earnings about 10% in the last 5 years, free cash flow 8.2, book value about 8.4. So I think I'm going to be using a 5%, just because I'm looking at the possibility of a recession. So I just want to be a little more in the safe side. If you are looking at the historical multiple valuation, I like to look at this. I know that's a lot of numbers, but I like to see what is the market, how has the market been valuing historically the Coca-Cola Company? How much are they willing to pay for it? And these are the median multiples that they have been paying. And I have two numbers over here because most people like to use the trailing 12 months, which is good. I don't have anything against it. But after going through COVID, I just kind of, especially whenever you're looking at the differences, how things change up and down. Like, for example, here in the free cash flow, you can see that I just started to get more into looking at the average of the last 5 years. So this is the 5-year average. And based on those numbers, whenever you multiply them for the medium multiple, we have a fair price of about $62 to $54. And it makes sense for the average to be lower than the trailing 12 months. Normally, you want to be seeing the average of the last 5 years being lower. So we're looking at about $62 to $55. I like to use the 3 other valuation metrics that I learned from reading the book from Phil Town. One of them is payback time. So I'm looking at if the Coca-Cola Company, if I were just to pay, if I would like all the free cash flow to pay me back what I invest on the Coca-Cola at 15 times, growing at 5%, what will be the value using the trailing 12 months and the average free cash flow in the last 5 years, and it should be somewhere around $50 to $52. Using earnings, discounted earning valuation, growing it for 5 years paying at 5%, paying at 28 multiple. The fair value should be between 36 and 43. Earnings, owner's earnings valuation. This is something that Buffett likes to value some of the companies. Sorry, and so it will be between 44 to $50. So whenever we put all together, I know there's a lot of numbers, but this is how I kind of like to do it. Whenever we look at everything, we should be paying somewhere between $50 to $57. That's the fair value. I personally like to look at the 5-year average because I like to be a little bit more conservative. But if you want to add both of those, that would be a $53 or $54 fair value. If you were thinking about a 10% margin of safety, that would be about $48. And a 20% margin of safety, that will be somewhere around $40 to $42 where you would like to come in. Right now, Coca-Cola sits at $54. So we will be looking at waiting for quite a while. If we wanted to go to $43, that will put us somewhere around the COVID downtime. And if we were just looking more for a 10%, that is about $48, which will put us somewhere around 2021. So there is quite a possibility that it comes down to around $50. So that's where I would be looking at entering again with a full position. And once again, this is just me talking on YouTube. Do not make any financial decisions based on that. I'm just a YouTuber, and this is for educational purposes. I hope you have fun, and I'll hope to see you next time. Bye.